Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Have you ever thought, real estate is great, but dealing with tenants and toilets and the day-to-day maintenance of properties is a real pain in the butt? I'd rather be involved in real estate, but just kind of focus more on maybe capital raising. Well, if you've thought of that, pay close attention to today's guest. Senate Eskridge, zooming in from the beautiful city of Twin Falls, Idaho, does exactly that. Sennett's been in and around real estate for quite some time. These days, he runs what's called a fund of funds. In his primary job, he's got two primary jobs. Number one, vetting potential partners, so people that he wants to do business with and raise capital for, and raising private capital. So, Senate, welcome to the show. Great to have you.
Dave, thanks for having me. I'm really excited to be here. This is going to be a fun conversation.
Awesome. So give us a little snapshot as of the middle of 2026. What does your business consist of these days? What do you do?
Well, you really hit the nail on the head. Finding good partners, good people with good deals, and vetting those deals and doing due diligence on them. That is my primary job, finding and vetting deals, as you mentioned, because the due diligence process is one of the most important things. And then what you talked about, raising capital, I like to call it investor relations or investor assistance. Really, my job from an investor's perspective is kind of a guide to find really good deals and help guide people into them. I don't consider myself a salesman or a capital raiser or anything like that. I just want to find the right fit for an investor and guide them into that.
Okay, well, that makes a lot of sense. So how long have you been doing this for, Senate? Did you get started in real estate this way, or is this kind of a progression?
It's definitely a progression. My W-2 career that I had the longest time, I was actually a financial advisor, stocks, bonds, mutual funds, life insurance. But all of my money was going into real estate, primarily single family, fix and flips, the BRRRR strategy. I did all of that from 2009 to 2019. And then in 2019, I started syndicating my own apartment deals. And then I discovered the fund-to-fund model here in 2023. So I'm 3 years, going on 4 years of doing this. And the thing I really love about it is I no longer have to be an expert in the asset class. See, I'm an expert in multifamily. And I believe if you are the operator, you have to be an expert in your asset class. Now, what I get to do is I get to be an expert in finding and vetting really good operators. So I can bring people deals that are very diverse, multifamily, mobile home parks, RV parks. I have a debt fund that I'm promoting right now that pays 16% cash on cash to the investor, right? Month after month. We bought oil wells last year, trash companies, paving companies. We're building a bourbon distillery right now, right? I can get into multiple different asset classes and I love it.
Very, very cool. So you kind of have touched on what the big difference is between having a fund and let's look at this. Compare and contrast, if you would, syndicating an apartment building deal traditionally, because you've done that in the past, versus raising capital for an apartment building via a fund. And then we'll take a look at fund versus fund to fund. Can we kind of go down that road for a second?
Absolutely. Yeah, let's dive into it. So as an operator, right, if I'm putting together a syndication for a specific deal, right, I've got to go through and jump through a ton of hoops, legal paperwork, all sorts of things to focus on just one asset class and one product and one deal, right? And then when the capital raise is over, we've closed the property, now I have to go and run this asset, right? And yes, that's my job when I own an asset, but it distracts me from my primary means and my primary goal, which is to help investors invest into deals. As a fund of funds manager, now I'm basically a giant LP. What I'm doing is I'm pooling investor capital together and coming up with, say, $1 million check, right? If that's 20 people at 50,000 or 10 people at 100,000, doesn't matter. And because I'm writing $1 million check, I can now negotiate enhanced economics for myself and for my investors. And I go and I make this investment as an LP. And then I just have to do investor relations to the deal. The workload is so much lower. So now I can go out and I can find more deals to bring out to investors. As a syndicator operator, I was lucky if I could do 3 deals a year.
Yeah. 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 No, that makes
Now,
sense.
now I can do 8 or even 10, and
Right.
so somebody that's on my list, if you don't like the deal I'm doing in June, just wait. In July, I'll have a different deal, maybe August, but soon I'll have another deal come out. Right. So it's
Okay.
about guiding the people into the deal that fits them.
What's the difference between a traditional fund and a fund of funds? Maybe walk us through that if you don't mind.
Yeah. So when you hear the word fund, the first thing that people think about is what's called a blind pool fund. Okay, so basically what that means is they set up a buy box. Let's make something up. We're going to buy Class B multifamily in New York City. I don't know why anyone would, but as an example, right?
Yeah.
Class B multifamily in New York City between 50 and 100 units. And we're going to spend somewhere between 10 and 20 million to do it every time. And they pool people's money before they get the deal.
Okay.
Okay. And then your money just goes into whatever deal fits their buy box. So you really don't know what is going into it. That's
Okay.
the traditional fund that most people think of. Okay. And what I use, this fund of funds model, I use what's called a flexible fund or a customizable fund. And what that means is somebody comes in and they sign a PPM one time, and now they get to invest in any deal inside of my fund. Okay. And so you're now investing into just one asset, and you get to choose and you get to underwrite that one asset, and you get to do your own due diligence on that one asset. Right. And then when I come out with another investment months later, that investment will not impact positively or negatively the previous one.
So
Right.
you're
So
not
that,
diluted by anything else. You're
right.
so it's
They're
almost like being an LP in a syndication in that case, in that
yeah.
your fund, your 50 or 100 grand is going towards that one specific property.
From the LP's perspective, from the investor's perspective, yeah, it's just
Mhm.
like a syndication. It's
Yeah.
one investment, one property, and you can't be positively or negatively impacted by the other investments in the fund.
Yeah.
That's the
Okay. Very
biggest difference.
Yeah. Very, very good. So thanks for explaining that. Now, you touched on something a little earlier that, when you were the operator doing the syndications, you were the syndicator, you were raising capital, you're running the deal, you had to wear all these hats. You had to be very, very specialized in multifamily. Now that you're doing the fund to funds, you're having a lot of fun dabbling around with different asset classes, even getting completely out of real estate with certain ones. And the real trick here for you is being able to vet operators. So if you don't have a ton of experience, let's say in oil and gas, but you want to vet an oil and gas operator, how do you do that?
Great question. So I'm actually a member of a co-op. So there's about 40 people that work together in this group. And the way it works is all 40 of us are in charge of sourcing and bringing deals to the group. So
Okay.
Dave, let's just say you had a great syndication that I wanted to go raise for. My commitment is I'm going to share that deal with the other 40 fund managers. Okay. And as long as at least
That
five
makes the syndicator very happy, I'm sure.
it does make the syndicator very happy because now they have
Yeah.
40 potential capital raisers, right?
Right.
But the cool part is we do due diligence together as part of this co-op. And we
Ah,
have a very intense process. And we're able to now vet multiple different types of deals because if I'm an expert in multifamily, well, what if we have an oil and gas expert? We have a multifamily or a mobile home park expert, right? We can now share the knowledge and do a group think. And we
mm,
actually go through really 5 levels of due diligence, which is insane, right? So first thing is we can bring in all the deals, and we have an investment committee that just kind of pre-sorts them. This is not due diligence. Imagine cherry picking. We say this one looks better than this one, right?
yeah.
So not due diligence, just cherry picking. And then we let the sponsor come in and present. And as long as at least 5 people say, yes, I want to proceed, then we go into our full due diligence process, which starts with a light background check on all of the partners.
Yeah.
And then we have a paid third party underwriter that we bring in. So he's completely neutral, completely unbiased, and he just fact checks all their math,
Mm.
right? So he's just make sure the math makes sense. And if that works, then we have a questionnaire that we answer about every deal with 240 questions on it. And that's
Wow. That you
growing.
guys answer.
We answer. And what we do
Okay.
is we divide that up,
Okay.
right? So if there's five
That's a hell
people,
of a lot of homework there, man.
right? So if there's five
Yeah.
people, we do 20-ish questions each,
Yeah.
right? If there's six, we spread it out even more. And then as long as all that passes, then we have a private investigator level background check that we do on all the
Oh, wow.
partners.
Yeah.
And so this all happens before I ever even advertise a deal. And then I have one more that I do personally. This is my own gut check. I ask myself, would I put my mom's money in this deal?
Mm-hmm.
And here's the thing. If I wouldn't put my mom's money in it, I wouldn't put your money in it.
Mm-hmm. Okay. Yeah, that's very, very thorough. Okay, well, that makes a ton of sense. I just recently did jury duty. So I kind of, very, very different, but it's the idea of having 12 people look at the same thing from different perspectives, right? So here you've got this mastermind of 40 people. You've got an expert in there in any particular asset class. So chances are you're not getting involved unless the expert's getting involved. Is that fair to
That's
say?
right.
Yeah.
100%.
Okay. Well, thanks for explaining how the due diligence side of things works. Now let's take a little look at capital raising or investor relations, as you call it, or investor.
Yeah.
You had a different term for it that I liked, investor assistance, right?
Yeah. Investor
Yeah.
assistant or investor guide.
Investor guide. So you come from a background of working with investors and their money. That was your profession. That was your W-2 years ago. What do you find works best for you in 2026 besides referrals? Besides word of mouth, besides that stuff, for connecting with new investor prospects?
I didn't expect the last part of that question, new investor prospects. So specifically the way that I'm growing my list is through free online education.
Okay. Yeah.
I do a monthly webinar, totally free. There's no sales pitch at all. It's just I teach a topic. Obviously, those people, it's a lead magnet, right? Those people go into my email list, my text message list. I also often go on podcasts like this and try to give free education. And then I have some partners that I go and I will contribute to them totally free. Like for example, in July, I'm actually doing a free training on how to become a fund of funds manager. And I'm doing that in partnership with my good friend Chris Schwagel, who is a performance psychologist for real estate professionals. He only works with them. And so I'm contributing totally free to his audience, right? And last time I checked, we had 65 people registered.
Nice.
I'm going to get a copy of that list, right?
Yeah. Yeah.
Just giving away free education.
Awesome. And with your years now that you've been doing funds and funds of funds, who are your typical investors in your funds? Have you skewed one way or the other? Do you resonate a lot with business owners or professionals, doctors, lawyers? Who's kind of your avatar as an investor?
This is probably the area that I'm probably the least, I'm going to use the word mature in, is trying to niche down, right? Because I've always believed that if you're really niching down, you're really narrowing your audience and losing a bunch of people.
Yeah.
And so I have intentionally kept my messages broad. However, the people that are attracted to me, right, are entrepreneurial people, people that are in a strong leadership role, and people that are really interested in personal and professional development. Because
Nice.
I'm kind of a personal development junkie, right? We didn't really talk
Yeah.
much about this, but I literally have two conferences that I host. One of them is just personal development, be the best human you can be.
And the other one?
Oh, the other one is real estate related, real estate education.
Yeah.
Totally no sales pitch or anything like that. It's called Idaho REI Con. It's for Idaho investors by Idaho investors. But of course,
Nice.
anybody in the world can come.
You do these events annually, or they do them a couple of times a year?
Yeah, so I do the personal development conference called the Idaho Summit. We do that in April every year in Twin Falls, Idaho. Ed Milet was actually our keynote speaker last year. So we
Okay.
bring in big names.
Yeah.
And then the real estate conference we do in Boise, Idaho, second Friday in October. This year it's October 9th.
Nice. So annual events. So yeah, that's smart.
Again,
Very
back to
good.
just providing education. That's what I
Yeah.
like to do.
No, but it's brilliant. You're leading with the giving hand. You're providing value. You're creating connections and relationships. That's really, really good. Awesome, Senate. So if people want to find out more about you and connect with you, what should they do? Where should they go?
I'm on all the socials. I've got a website, all that stuff, but the best place is meetsenate.com. Just one word. And what that is, it's like a link tree that has all of my stuff on there. You can download my contact information, get my socials. You can even book a call right on there. So meetsenate.com.
You probably get asked this question all the time. You've got a very unique first name. Tell me a little bit about the story.
Yeah. So in Idaho, there's Sun Valley, Idaho, which is a famous ski resort.
Yeah.
And just above that is a place called Stanley, Idaho, very, very popular. Between those two places is a place called Senate Creek. And my family has gone camping on that land and mined it and logged it since before my dad was born.
Wow.
Right. So every single summer as I was growing up, I spent my entire summers in this area on Senate Creek. And I'm named after that amazing, beautiful creek.
Well, that's the best reason for a name I think I've ever heard.
Thanks, Dave.
Senator, it's been an absolute pleasure. Thanks for being on the show.
Yeah, it was a fun time. Thanks for having me, and I look forward to serving your audience.
All right, everybody. Thanks for tuning in, and we'll see you again on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.